Good morning, everybody. Dale Pinkert with TradeGATEHub.com, and I have the privilege of speaking to Helene Meisler again. Welcome back to TradeGATEHub, Helene. Really appreciate you taking time out of wild markets.
Thanks for having me, Dale. Good morning.
Okay, so everyone's watching headlines, and I talk to people that are news traders all the time, and they say you really have to be nimble, that no one has traded in this type of market environment for a long time. In fact, geographically, probably it would be my father or grandfather that would have seen action like this. First of all, let's start. I know you're a technician, but do you have a gut feeling about what's happening with Ukraine and Russia? Do you think they're going in? Markets like the ruble and the Russian stock index are saying that he's not, at least right now.
Well, I'm not very good at narratives, I must say, and I can promise you that oftentimes if you gave me the news, I probably wouldn't know how the market would trade thereafter.
Yeah.
So
yeah.
I'm better off as John McGee, who wrote what I consider the Bible on technical analysis, used to say you should sit in a dark room and just look at the charts and forget the news. So I'm gonna use that as my guide. And the narrative is written after the price moves. So
the reporters tell us what the narrative is after the market's already moved. And in fact, Helene, that was the first book I read on the markets, the technical analysis of stock trends by Edwards and McGee. It's funny. It was, I think, a required religious book for technicians.
It was the first one I think I read as well. If not the first, maybe the second, but yeah. And I happen to have 2 copies, so.
Okay. Well, I know you're a big sentiment trader, and one of your biggest fans works here, Michael Venezia at TVM Trader, and he follows your stream very closely and posts your stuff, and I love your insights and what you're seeing. So we don't have a lot of bulls here, kind of a pretty low level. Should we consider this contrarian type situation setting up here?
This morning's release of the American Association of Investors came in at 19.2%. You don't get this in reading as a teenager, as I call it, very often. And in fact, the last time we had these as sub 20, would you believe, wasn't even 2018, wasn't even 2020. We have to go all the way back to 2016 to see it.
Was that the taper tantrum?
No, that was 2013.
Okay.
2016 was the collapse in energy.
Okay, that's right.
You remember that?
From 140.
It actually began in 2014, 2015. It was a pretty slow moving train wreck. And by January, it was, just full on. And we made a low in late January. We rallied, we came back down and made a secondary low, and then we rallied again. So I will say what I find fascinating, and they're not wrong, but is the bears are out this morning scoffing at this reading because in January 2008, the bulls were below 20%. Yeah, well, you know what? We had a 10% rally off of that. So, I'll bet that the person who's scoffing at that probably doesn't trade on a 1-year time horizon, but
probably wasn't even trading back then.
Well, whether they were or they weren't. I mean, if you can get a 10% rally, people would like that.
Sure.
So anyway, that's kind of my general view is in terms of this particular sentiment indicator, the bulls are non-existent.
Okay, and so this is a very unusual reading if you have to go back through history to find one this low. That's the bottom line.
Correct.
So would it be at a minimum to have the bears pull their claws in for a while until they see more bulls entering the market and sentiment shifting at least back to neutral?
Well, I have a pinned tweet that says nothing like price to change sentiment. And,
Beautiful.
you know, a rally would see the bulls change and the bears change. It usually does.
Okay.
And anyway, in terms of the American Association, the AAII, they're individual investors. I also, and I feel you will often see me say that they jump around like a bunch of day traders.
Okay.
And so I also like to look at the investors' intelligence.
Yes.
And the investors' intelligence are newsletter writers. So they are people who actually pay money to hear their views or read their views. And the bulls are quite low there too. They're at about 33%, which is low for them. But one thing I like to take a look at is the 10-week moving average of the investor intelligence bulls. And here's a very long-term chart. This particular survey has been around since the 1960s. But what I find interesting here is that with the exception of 1994, 2008, 2009, and then there's that 2015-16 period again, pretty much you can see that when the 10-week moving average gets down to this 40% level,
yes,
we've about had enough.
Okay. So even the guys that are pros, not just, retail, you're talking about people that supply info, not just retail, but, I know a lot of these newsletter writers that have institutional clients. That's their big part of their business. And
right. Now, so I'm not saying that these can't get down lower.
right.
I'm just saying that the history is, they were up over 60% last fall on a 10-week moving average. So nobody was terribly bearish last fall when they should have been.
I was, but I was early.
Nobody's terribly bullish.
Yeah. So, so we're on the other end of the spectrum.
Right.
Right here.
We're getting some sentiment extremes is what I would say.
Okay. And I'm sure the fundamental geopolitical backdrop is, only reinforcing people's fear right now.
Right. As someone said to me today, well, what do you think it'll take to turn it around? And I said, if we had the answer, it would be priced in.
That's right.
So, it's the same way when markets are at highs and you think something is not right. Someone says, well, what's going to take us down? I'm like, exactly. If we knew, it would be priced in. And that's just,
Yeah. So I mean, your philosophy is, the charts, you really don't even have to know. Price is king. And you're a big sentiment person. Do you tie in these sentiment indicators with some technical action before you would perhaps take a position in the market? Sentiment isn't always, you need some kind of trigger, don't you?
You need a lot. Yeah. I mean, just sentiment on its own. I mean, markets can stay bullish a long time and they can stay bearish a long time.
Yeah. You and I have seen that for sure over the years.
So I use the advanced decline line and I plotted that, I do a 30-day moving average of the net.
Yeah.
To see when we're getting oversold.
Okay.
And well, it looks like we're oversold. Technically speaking, we really won't get there for about another week. But you can see how far down we are already.
Yeah, I mean, the only lower low was at the COVID crash.
Correct.
Okay.
So, you can see that at this point, even if we come down over the next week, all we're going to do is head to a really good oversold reading. Okay. Got it. So then I would have the bearish sentiment and a decent oversold reading if this comes down over the next week. Okay. I would also point out that in January, at the late January low, and I don't have a chart of this, there were 1,755 stocks making new lows on Nasdaq.
Yeah.
My sense is that's going to be a peak reading. at least for the time being. And to give you an idea, yesterday there were 240 stocks making new lows on Nasdaq. So I always have to say to myself, if the market falls, another 4 or 5% from here, and I don't know if it will, but if it does, I don't think you're going to have more than 1,755 stocks making new lows.
Okay.
And so I would then have a positive divergence,
right?
Because I would then have fewer stocks making new lows when the markets come back down to the prior low.
Okay, and we don't have that condition yet. Well, does it take more than, say, one more new low and better breath, or can it take, a couple?
I mean, my sense is we're,
Close enough.
We're working towards it. Is there going to be that one day where you say, oh my God, this is it? It could be. But I'm giving a general overview of where I think we're heading.
Yeah. So the underpinnings of the market are starting to not get worse. You could at least say that. They're not getting worse, they're getting better.
Right. There's some minor improvement.
Okay. Got it.
Whereas to me, we spent the entire year of almost the entire year of 2021. I'll just say maybe the whole second half is a better guide with a bunch of deterioration.
Yeah.
I mean, everybody thinks the S&P and everything was just so wonderful in 2021 when the reality was the majority of stocks were already going down from February.
The indexes were the last pin to fall.
Exactly. There's an old saying that 1/3 of the stocks will top out before the indexes, 1/3 will top out with the indexes, and 1/3 will top out after the indexes.
Interesting. I've never heard that one before.
You clearly had well over 1/3, if you ask me, making their highs a year ago. So, so many stocks, everyone's like, oh, this is a bear market. Yeah, but it's been a bear market for so many stocks for about a year.
Yes.
It's not new.
Yeah.
You're just noticing it now.
Right. It's getting headlines now.
It's getting headlines. It's because the indexes are down. It's because the beloved stocks finally cracked.
The FANGs.
The FANGs and the software names, I mean, a year ago, the SPACs died, the biotechs died. You had a lot of those speculative names died. So they're already down a bunch. They can go down more, but in other words, this is not new. Everybody thinks it just started. It didn't just start.
Yeah, the only thing they would follow is like the ARC fund, which was down, 70%, but she wasn't the only manager. There were a lot of stocks that were down 70% before the indexes even rolled over.
Well, here, just take a look at this oscillator chart that I showed you. You see this peak right here. Okay. Yeah. This peak came even before all those stocks topped out. By the time, and so it's a momentum indicator. Look, by the time we started going down in January and February, look, most stocks were already at a lower high.
Yeah. Amazon didn't make a new high since the spring of 21.
And every single high in this momentum indicator has been a lower high and a lower low. So in other words, that's what stocks have been doing for a year. This is not new.
Okay.
Point
well taken.
I just feel like it's like everybody's sort of come around to seeing it now because, the 25 stocks that were holding up the market, gave way. Right. And now all of a sudden those stocks can't find a bid.
Yeah. Facebook on its face.
Right. Face plant. Correct.
Face plant.
And so, if we now take a look at what's the overloved group, it's energy.
Yes.
And I don't like energy here. I'll tell you, I haven't liked energy for about 2 weeks. And here's just, I mean, if you take a look at XLE, which is, I use for the energy stocks,
right?
It is trading at the same price it traded at on February 1st.
It way underperformed the commodity.
And yet oil, I'm using the April contract because I think it's sort of the front month now because it's where the most volume is.
Okay.
But you've gone from 86 up to 94, and the energy stocks haven't done anything. Okay. But now if I just look at crude itself, look at that black uptrend line.
Yep.
Okay. If that breaks, and I would like it to, I don't know if it will.
I'm sure
premise
so.
is that it will.
From your lips, Helene.
Yeah. Imagine what will happen to sentiment on crude.
Yeah.
If it comes back to 78.
Right.
Which
It's
would be
also
a great place to buy it. But at 78, you can be guaranteed no one's going to be liking crude because I'm sure there'll be a whole narrative why you can't like crude.
that's a great look if you're short for an area to cover as well, Helene. I appreciate that.
Okay, so that's my view on crude. I don't like it here. But again, I haven't liked it for a couple of weeks.
Are you from the school that believes that the shares should actually outperform the commodity rather than the other way around, and that they turn like the miners and in oil,
Like
they should lead the way?
I don't, because I have seen times where the stocks lead the commodity. Yeah. So I don't have.
I used to, I don't anymore.
But I do have a view that the two should be confirming each other.
Okay, yeah.
And right now they're not confirming, and they stopped confirming in early February.
Okay. So here we're looking at yields. A lot of people were looking for 2% a long time ago, and we've gotten to about 205. And I have to believe I get this thing called DSI. Do you look at that at all?
I do. And the DSI got to 12 2 days ago.
Yeah, that's what I mean. The readings are quite extreme, and there's even some momentum divergences beginning to take hold here. So what's your view?
And I'll tell you this. If you do a little bit of math, you take the high of this pattern on the bonds. This is the March bond. Call it 164.
Right.
And you subtract the low here. There at 156. Right.
Okay.
You get 8. And if you subtract 8 off of where we broke down that blue line, because that's really when the bonds cracked. Everyone will say they cracked here, but no, that was just a lower low. The crack came here.
Right.
And if you take 8 off of 159, you get 151, right?
Yeah, exactly.
And look where we stopped.
Right.
For now, at least. And as I said, sentiment got quite extreme. So I think bonds are going to settle down now. And possibly even rally.
Okay.
So that's been my view on bonds. I think even if they come back down, you're probably only gonna get more bearish, and then
I love the measuring technique, and it should shed a light on people that are new to the business, trying to learn how to trade, that you don't need a million indicators and you don't need a million things to line up. And if you could add and subtract, and you have an eye for formations or geometry, and you could multiply and divide, that's really all you need in pattern recognition and counts.
Well, it's true, but I'll show you this, that sometimes it just works out this way. Take a look over here. This low is 154. This high is 157. That's 3 from 154. You get 150. So in other words, you've got a lot going on down at this neighborhood.
You have 2 counts that give you the same objective, the confluence on the counts.
That's right. And I'm not going to kid myself. I don't think bonds are going to scream back up over 154. I mean, I think that would be a big ask because there's so much resistance there.
Right.
But at least I think you can take that that huge negative bias of bonds out of the equation for now. I think they've just had enough on the downside.
Okay, great view, Helene.
And finally, I would just say that everyone is all of a sudden, how come I'm not getting, here we go.
There you go.
Everyone has all of a sudden discovered high yield.
Yeah.
And I would point out that I just said this in my column. First of all, high yield has been going down in a straight line since December. And if you were watching the Olympics, it would look like a downhill ski.
Yeah.
racing against time. And yet, you know, maybe this is just another bounce like you got in early February here, or like here, but yesterday was quite a move. And nobody seemed to care and nobody seemed to notice. And again, with that DSI getting so low, I think the pressure probably starts to come off of high yield now as well.
Okay, probably all yields. You know, I actually know some people, you know, I talk to some smart people, including you, Helene, and work with some. And I know some people think the 10-year could pull back to 1%.
All right,
Even if it
that
goes to
would be a
210.
lot, but okay.
Yeah, anyway, you know, that's a Nostradamus call.
Right.
Anyway, so do you want to wrap it with one more chart? I
No,
know you're
that's
close to your record here.
okay. No, I'm gonna leave it at that. You
Okay.
know, I guess I would say that should we get a decline over the next week, I would probably start looking for the market to rally well, the equity market to rally well into early March.
Okay. Well, Helene, thank you for really clean looks and clear descriptions of them. And if you want more of Helene, you could follow her at H Meisler on Twitter, HMEISLER. And you could read her daily column on realmoney.com and should be part of your intelligence gathering. I know that I gain insight every time I talk to Helene, so I appreciate your giving spirit, Helene.
Thanks so much for having me, Dale.
All right, good hunting, my trading warrior sister.
See you, bye.
All right, adios, everyone. Hope everyone enjoyed the interview with Helene. It is recorded, and you could go back and listen to it again and take a look at her clean charts. So remember, don't just count your pips, count your blessings. Have a great weekend.